Aussie dollar. What an absolute frustrating trade this has been. I mean, normally has such great sort of correlations with equity markets, gold. Obviously, sort of it's not part of the DXY, but inverse to the DXY. But we've just really seen it sort of underperforming a lot recently. When it's been on a bit of a bullish push, obviously we got this sort of fake out move down here. I mean, it ripped here, but the speed in which this is coming back down, particularly this last week, has just been just so insane. So, I mean, if you look at this, this is on daily time frame and that, and this is going back to, look, pretty much the whole year. It's going back to sort of like start of Feb, we came into this, and realistically, it's just been ranging the whole way. You've got a couple of sort of fake out moves. So we had this push to the downside here, which obviously dragged in a whole bunch of shorts. It sort of pushed, would have stopped out anybody that was trying to look for this sort of sweeping rolling sort of bottom to sort of come back up here. They'd, okay, technical positions, put my shorts down here, bang, stop them out. And of course, then they rip them back up. Just this is squeezing out all the people that got short on this technical move. And if you look at the move here, it's a very similar sort of fake out move as it's spread over a couple more days than the DXY. But the DXY recently had this first drive down, push back up, second drive down, and unable to close and commit. Because you got to think this candle here was a solid yellow candle, or sort of down day candle, yellow for me, but that's a solid candle at one stage, and that's a lot of the market going. Here we go, we're going back down to, sort of 2000, sorry, 63, 6400, 6200, sort of the sort of end of 22 lows. But of course, bang bang as market does, pulled them in and then ripped it straight back up. So that's going back a couple of weeks. So more recently, we're looking at these sort of sharp pushes down here. So if we could put this up the top here, this is obviously showing the top outside area, and we've broken out here twice of this sort of range that we've been respecting the whole year. Both times, 69 came in like I think it was about 4 points lower. The second effort there, double rejections, and it has just been absolutely demolished since. Especially the last couple of days. If we look at the drop off here from this point here, this was we were actually if you look at this, before I do that, I'll just jump onto the 4 hour. If we look at the 4 hour here, so this is that point that we were looking at 2 seconds ago. That spike high there. That was a Thursday night, and that was actually that sort of daytime Asia session. We had been sort of kind of playing a bit of this channel previously, as you can see, and we were sort of coming back down. We're coming off a retest of these 69 levels. It actually broke out, and as you see, it put in a new high here. It drove, and once this broke here, this moved very quickly up to the top side here. And I think this has really sort of sucked in a lot of the markets, saying, okay, after this big sell down from 69 and then sort of sweeping to sort of come back up here, we're not even sort of making it that low this time. We're sort of finding a little bit of sort of support sort of midway through. So this level here around 67 or so. And we're not making it down this time here. So we're going to push back up. And I think this trapped a lot of people. This also happened to come in at the same time as the BOJ were talking about the yield curve control. And also there was a bunch of dovish comments out from the ECB. So it was a double whack for, obviously ECB's more for the euro, but yeah, we run by proxy with this kind of stuff. And when people are sort of selling the euro, well, they're buying the US dollar because they're seeing a better yield on there. You saw the US dollar just absolutely flipped on its head and just went bang. It was rolling over itself. So everything was looking like it wanted to sort of continue in that sort of risk on sort of mode, and then just went bang. And I think that trapped out a lot of the market. So yeah, it would have caught a few people off there. So as you see, we sort of come back down, and we've blown out the bottom side of this range here. So if we go back onto the daily, you can see the market was attempting to sort of move back into this zone. So lots of this stuff here, really. It was trying to move back down back up through here. Into the end of the week, it actually had quite a good move off sort of weak softer NFP detail numbers. So it did have a bit of a push up, but as you can see, it's not a super confident uh, bullish candle. We would have wanted to see a little bit of a stronger close up around that 6600 level just to sort of say that, okay, we may possibly be seeing something similar to what we had back here at the end of May. Obviously, this is over a couple of week period, but you can see once you got that strong bullish candle, well, you're seeing that continuation back up into the range. And, not to sort of say that we're going to be sort of coming up onto a sort of 400-point move necessarily here. Certainly, I think there's a lot of people that would be sitting around the 67.20 level that would like to sort of get off. I would sort of say that, look, we've probably got some short-term weakness coming in with the US dollar, which will help Aussie. But I don't think we're in a case where we're necessarily going to be sort of trapping the people like we did in May and then pushing back up to the top side. So I would say some maybe short-term strength in the Aussie dollar, but 67 is going to be certainly a strong point that we're going to be sort of seeing for a potential attack back down on the lower part of this range, which we've sort of seen like, previously as it sort of just churns through this whole range kind of thing. So this was that point that I was talking about. It's sort of like on the 4 hour came out, broke out the top, and then just went bang. And that's right, it was doing, so showing the strength of this game. So this first drop down, this was 2 days here. It actually broke its weekly open. I can't remember exactly, but I think it was around the 67. And I think this was the weekly open here. And once that went, it just went boom, so straight down. So, we're seeing in 2 sessions. It's actually sort of one because this was late night Thursday. So realistically, the second half of the US session there, and then Asia, Europe, US the next day. So it wasn't really 2 days, but that's just the way that the candles fall here. But we lost 3%. A 200-point move for the Aussie is just incredibly fast. And then not only that, did we have a big push up on to start the week on the Monday, a little bit of reprieve. Then we had another drop, and this drop here was another 200 points. So, this sucked in a few people. So, I mean, realistically, over 3 or 4 sessions or so, we've lost 4.35%. That is a massive move for any currency. And 300 points for the Aussie is really quite sort of quite a strong move and quite a significant position from the market to say that, look, we don't want Aussie dollar. And this is what I was saying before, that it seems to have lost a little bit of its correlation more recently with the whole risk on environment, because you're getting equity markets coming to near highs and you're just not seeing, you're seeing Aussie near yearly lows. So, you know what I mean? It's even those that are the market saying, yes, okay, we're happy to be risk on in some areas with the equity markets and everything pushing through, and you're starting to see a lot of these central banks pausing a bit more frequently. You're not seeing that appreciation in the Aussie dollar value and price. So, again, like, well, I want to see it back above this zone because, as you can see, at the moment it's in danger of sort of doing a bit of a retest. And if we get a retest here, then we really could be tackling these lows down here. And these lows, if these, I mean, I would expect, again, this may be a short term. So if we get a bit of downside on this, I'd be looking for, if we do get a push down here, which ultimately I think we're probably going to come back up into this range, do something like this up here, reject here, which would be this falling resistance here, and then come back, tackle this, and then maybe back down over here. So I do actually think we have some short-term reprieve in the Aussie dollar for the longs, while it sort of lines up with the DXY, potentially a little bit of short-term weakness after the NFP details that came out. But if you look at the other side of the equation and you say that, okay, no, this is actually a break. We've seen the markets valued it here previously, and we're seeing it, okay, now we're underneath it. We're sort of rejecting from here, as we quite clearly have, and we're going to go a little bit lower. I think there's a good chance that we come down around this sort of 65 level, and that this support zone down here probably plays its part. So possibly a little bit of a sort of fake move down here, and then sort of move up, and then we could be looking to move further back down. But I don't think at this stage we're going to get a continuation of this complete whitewash move and go right down to these lows of 63 at this stage. But we'll have to sort of wait and see how we go with that. So that's on the daily view. If we have a look sort of on the lower ones, it wasn't a great close, as you saw that rejection on there. But look, it's struggling. This is on the 1 hour. It's struggling to sort of keep above. Well, it's actually obviously back down below this 20 MA. It tried to bounce along this a bit here. It actually broke down here. This is when NFP sort of dropped, and obviously we had a quite strong reaction as the DXY was sort of selling off as well. I understand that Aussie isn't part of the DXY, but you know what I mean. That it's a broader sort of sense of where risk is in the market. So if we sort of drag these ones out here, if we say we can hold the same gradient, then we could potentially be seeing a little bit of maybe continuation of this sort of energy here, but then I would again, I think that we're going to see a little bit more upside in the short term at least, and then sort of we're going to have to sort of make a bit of a decision once we get up around the sort of 67 level, if we can break these highs here. So these are some like obviously lower level resistances that we would like to see above 66.20. I think after that you got a pretty clear kind of, I mean, you can just see the strength of this move as it was coming down. There was this bit of a spike here. I think this was around we had some pretty weak China data that came out, and then we had the RBA. That's what was really sort of confirming this move here. You had a whole bunch of things happening at the same time, but the weaker China PMI data, and then an hour later we had, or an hour and a half later, we had the RBA pausing, and the market's just like, well, why do we want to buy the Aussie? We're already not. I mean, we're already selling it pretty hard. Here's just another reason to sell it even more, and you just sort of see the price just really sort of fall off here. But sort of towards the end of the week, and they started to see a little bit of buying coming in, sort of sub 66, and then we sort of saw this little grind down the bottom here, and then it was trying to hold a bit of a channel. Obviously, popped out the bottom side here. The NFP helped it sort of push back up, but of course, into the end of the close of the week, people are happy to go, look, that's enough for me, and they'll just sort of sell that off. So certainly not a great finish to the week for the sort of anybody that's long on the Aussie dollar, but at the same time, I still think the US dollar is probably going to have a little bit more of a downside from that NFP data. But we'll have to sort of wait and see how that goes there. Main sort of thing short term, want to get above the 66.20 level, then we'd be looking for the 60s. It'd be nice to sort of get up around 66.20, 67.20, but I think around 67, 67.10 levels would probably be the areas that we'd be looking at for a sort of short-term reaction from the market if we can get above this 66.20 level.